Good morning. Sorry, I don't speak Portuguese. I am Argentinian, so I speak some Spanish, but I don't speak Portuguese yet. What Thiago said applies to the industry of re-refining in United States. So the description of the process and the description of the applications that Thiago mentioned are really basically what we do in the United States. Probably in the States, the industry is bigger, and you will see the quantities. But I have to say two things. I travel around South America quite a bit, and I've seen many plants of different kind of technologies. And Brazil has the most evolved law in collecting and what to do with the used oil. Even, I would say, Brazil has a better law than the United States in what you can do with the used oil. I represent AVISTA Oil. AVISTA Oil is a German group. And Brazil is the only country in the whole American continent that, in my opinion, has laws similar to European laws, which do not allow the burning of the used oil legally. Because there are a lot of contaminants in used oil. It's proven that it's carcinogenic. And I want to make that point because, again, another thing is to enforce the law. I know it's not simple in a country as big as Brazil, but the law is there and has been well defined. The second thing is I've seen many re-refineries around the world. Probably I've been in 40, 50 different re-refineries. All my competitors in the United States, I've been there. I've been in plants in South America. I've been in plants in Brazil. And again, Brazil has a well-advanced industry in re-refining, not only on the equipment side, also on the understanding on what to do with the used oil. It's not that easy to understand how to run a plant. Our plants are not standard refineries. I come from refineries, so I have some experience with crude oil. But the level of knowledge that I found visiting colleagues, that some of them are present here, was kind of revealing for me because I haven't found these in other countries. So the idea of the presentation is not going to be technical by any means. It's just to show you what happened in the last 6 years in our industry in the United States. It was a lot of up and downs, and was defined basically by the price that base oil is sold to and the price of used oil. So this is the agenda. I will briefly describe AVISTA in just a few words. I will use some data for the presentation. So I will describe my sources. Then I will show you what do we do with the used oil in the United States. I will describe briefly where are all the re-refiners in USA. And then I will describe what happened in the last 6 years in 3 parts, because we went through kind of a market that evolved, and I just tried to split it in 3 parts because they were pretty clear the differences between them. And just closing remarks. So, for the ones who don't know AVISTA, we have been collecting used oil. We started in Germany from 1952. We collect today in 7 European countries and 14 states in the United States. We collect 540 million liters. In the United States, we talk in gallons, but I converted all the presentation into liters. Hopefully that helps. So we are the biggest collector of used oil in Europe, and we are the 3rd biggest collector of used oil in the United States. On the re-refining side, we have 3 refineries, 1 in Germany, 1 in Denmark, and 1 in the southeast, which is close to Atlanta. We produce 210 million liters of base oil in between our 3 plants. We produce Group 1++ in Europe, and we produce Group 2+ in the United States. We also produce Group 1, but now the market is moving a little bit more into Group 2. We also operate 2 blending plants, one in Germany and one in the United States. We are owned by a family from Norway. They own many different other businesses, but the Mustad family has been involved with recycling businesses for many decades now. I will use, in many charts that you will see, I will use 3 sources of information. One is WTI, which is the main index to define the cost of crude oil in the United States. And that somehow defines the cost of the crude oil for the refiners. Because as you know, re-refiners selling base oil compete with refiners, much bigger players. And even when they buy many different kind of crude oils, WTI, West Texas Intermediate, is the main index around the United States to define the cost of crude oil. Also, I will use the spot price for SN 150, which is one viscosity of base oil. For the ones who may know, Argus puts together a weekly report showing the spot price. It's an important report because there are posted prices, but the posted prices do not reflect reality anymore. Probably for the last 4 or 5 years, posted prices are not reflecting reality, so spot price are way more precise. And then I will introduce some information that is not well known and is not easy to find, which is the price or cost of used oil. And as you may know, and you will see, for some time, we collectors have been paying for the used oil. So if you were a generator of used oil, we would pay you to collect your oil. It seems crazy to me, but that's the way it worked. That changed a little bit in the last couple of years, and you will see I am involved in the industry of all the refineries in the United States. I am exposed to weekly pricing, and I want to believe that we have a good understanding of what is the price on the streets. The price I will show here is kind of an average, because the price of used oil in the United States change a lot based on where you are. United States, you can be, in the Midwest, on the West Coast, on the East Coast, Northeast, Southeast, and the prices are slightly different. But the prices I will show today, in my opinion, are a good representation of the real market. So what do we do with the used oil in the United States? What we do is, most of the oil, the 100%, when you add all those numbers, you get to 100%. 100% is the amount of oil collected. I am pretty sure, and this number is not clear, nobody can prove it, about 30 to 40% of the used oil generated is not being collected, which means that it ends up somewhere. But out of 100% of the oil that we collect, 45% of the oil is used by re-refiners. 18% is used by plants that are called VGO producers. VGO means vacuum gas oil. These are plants that collect used oil, and instead of going through the whole process of re-refining, they only remove some contaminants and produce fuels. I would call reasonably clean fuels, and they are used mainly for cat crackers for refineries, or they are used for marine diesel, to be blended with marine diesel. 20% of the used oil is exported. So the United States has been a big exporter of used oil for many, many years. This is done particularly between New Orleans and Houston, and it's quite spotty. And that is a very important factor. Let me see if I can do this. Let's see. Anyways. Well, as you can see, base oil and VGO producers are ratable. Means we consume used oil 12 months a year. The export market is spotty. Means that they only open the market when there are some deals available. Sometimes, usually this used oil goes to Mexico and to China, and sometimes to Eastern Europe. And people come in and say, we want to buy a significant amount of used oil, and for 2-3 months, used oil is exported and then shuts down again. 15% goes to industrial burners. So yes, in the United States, the law allows industrial burners to burn used oil. There are special permits, mainly for paper mills and asphalt plants. And there are some applications in heating oil, and as you can imagine, is very seasonal because usually they use that during the winter. And then there is a 2% of space heaters. This is something that United States exists. If you have a right permit and the right space heater, you can burn your own used oil, for heating purposes in your own shop. The map shows where the plants are. The green ones show the base oil plants. So the green dots show where base oil is being produced. In those places, used oil is consumed and base oil is produced. The red dots show VGO plants. This, as I said, these plants consume used oil, so we all compete for the used oil, but the red dots produce vacuum gas oil. Here is the first chart. I want to explain what it is. As you can see at the bottom, the green line is WTI, the cost of crude oil. The yellow line is the spot price for base oil. And the red line is the spread, is the difference between the other two. And what we see there is, for some time, the red lines were in the 40 to 60 cents dollars per liter spread between crude oil and base oil. But then, as you can see, and I don't know if the pointer works there, but anyways, at the end of the period, crude oil stayed the same. You see the green line stays roughly the same. But base oil price went down. Went down, and for all the producers to continue selling base oil, what they have to do is to reduce the price and reduce the margin, reduce the spread. So as you can see, that red line going down to the 20 to 40 cents range meant that the base oil market was long, and it was really long. Now it's getting a little bit more balanced, but it got long. So that would happen from 2010 to roughly the end of 2014, Q3 2014, sorry. So base oil producers, everybody in the base oil market had to give up margins to keep market share. So, but this doesn't show any re-refinery economics. This is just to show you that in which kind of market we have to compete, because this is what happened to anybody selling base oil. So what happened in the re-refining industry, in the used oil collection and re-refining industry? You see that at the beginning of this period, base oil, the yellow line is base oil, went up. The margins went up, but all the re-refineries in the United States had to start paying more for the used oil, and that is the blue line. You see how the blue line went from roughly 10 cents to 30 cents. So it tripled. The price of used oil paid on the streets in the United States tripled in a matter of 2 years. But then base oil went down. And I will explain the reasons in the next slide, but just remember that re-refiners were not able to reduce the cost of the used oil. So the red line, the spread, continued going down. So what happened in this period? In this period until, I would say, from 10 to 12, there were strong margins, and a lot of people wanted to have re-refineries because they were looking at this red line there between around above 80 cents, and a lot of people went to the market and tried to build re-refineries. So everybody wanted to build more capacity. As you can see there, I put some of the companies. Noble had an expansion 24 million gallons, 24 million liters, sorry. Another company, 240, Nextlube, and we were also there at the end. We built our plant in 2013. So it was a boom time. But at the same time that the margins were good, the prices of used oil was going up on the streets, and we were losing the capacity to keep the margins healthy. Everybody was expecting more refineries to come online, so collectors continue hitting the market, raising the price of the used oil. For a lot of the generators, we call in the United States the quick lubes, where you change your oil, they started making significant amount of profit just selling used oil. I have an anecdote. I got a phone call from a company in Mexico, and they were trying to buy quick lube, those places where you change the oil in the United States. And he said, I received the financial statements, and I see that the main reason that this business is making money is because it's getting paid for used oil. All the other revenues about changing the oil, changing any other product, any other service they will give was minor. The generators of used oil in the United States were mainly making money because we were paying for used oil. So the person called me and said, is this true? I said, yes, that's how the market is working. So the exporters also got good margins. Remember at that time, WTI was at $90 a barrel. So they wanted to buy as much used oil as they could and export it mainly at that time into China. And they made significant amount of spread, significant amount of profit. There was no connectivity, well, I wouldn't say it wasn't. The connectivity of natural gas was quite low. So all these industrial burners would be burning used oil because they didn't have access to natural gas. But that was also changing. So the conclusion was prices, and again, sorry for going back, but I want to stress the point. Prices went up and stayed high because everybody wanted to buy used oil for different reasons. But as I said, all these trends started to change. And this is the same chart that I showed you before, but I just added an extra piece of time because I went now from Q3 2013 to Q4 2015. And now you see crude oil, the red line going down, and you see base oil price going down, the yellow line, and you see how the spreads, the red line, started to suffer quite a bit. So what did the re-refiners do? Well, same thing. You see the blue line that I showed before. And when base oil had that big drop, when crude oil dropped, you can see what happened with the used oil. And just look at the blue line. This is major surgery. In a matter of 6 months, I would say 40% of the used oil collectors in the United States disappeared. Some of them went bankrupt. Some of them parked the trucks. Some of them were bought out by somebody else. But when that had to be done for everybody to be in business, there was a major surgery in the industry because if you wanted to stay in the business, continuing collecting and continuing refining and making a reasonable margin, you have to cut the price of used oil. It was a major, major disruption in the market. And this happened in the first 6 months of 2015. So during that period, collectors started to feel the pressure. Bigger refiners, including us, bought smaller companies. So Safety Clean bought Thermofluids, HCCI bought FCC, we bought Metro. All the investments of re-refineries that were being built were completely stopped or withdrawn. Natural gas connectivity in the United States has grown quite a lot in the last 2-3 years. So these companies that were using used oil because they didn't have connection to natural gas Well, now they have connection to natural gas. Natural gas is very cheap, so they don't use it anymore. So there is more oil on the streets for being collected, for being used. Exporters don't have any spread now. When you are an exporter, you have to pay for the tank, you have some fixed cost, and when WTI is below $50 to $40 a barrel, there is no reason to do any exports because you don't make absolutely any margin. So all the consumers of used oil disappear suddenly. So with lower demand, used oil price collapse to no charge, no pay model. However, the price of crude continued to going down. And again, I want to, sorry, I will do this, it's not very, look at the question mark at the bottom. Yes, there was a major surgery in how much we pay for used oil. But at some point, we got to zero. So the question everybody had at that time was, if the base oil price continues to go down, the only way for the re-refinery industry to get a healthy margin is to start charging for collection. And again, keep in mind that we are in an industry in which for 6-7 years, the generators used to make a significant amount of profit selling used oil, and suddenly we have to go and say, now you have to pay us to collect the oil. So that's why I put a question mark. And the question mark I had in my mind in Q4 2015 was, how is the industry going to do this? Are we going to be able to charge? Is the industry going to handle this? So the last piece of the story is base oil price continued to go down, and used oil collectors in the United States started to charge. That's what you see in the blue line. The cost of used oil became negative, meaning that people have to pay us to charge. As you can see the trend in the last few months, we are charging more and more and more just to recover the margin. The story has a healthy ending because you see the red line, the margins for re-refiners improved quite a bit, I would say. We went from 40 cents to close to 60 cents. And again, that is an average. I am not disclosing any particular company information. But I would say that re-refiners in the United States in the last 6 months improved significantly the economics of the business for 2 reasons. First, base oil went up. Second, we started charging for used oil on the streets. In fact, if you follow, my 3 main competitors in the United States are public companies. So I follow them on the quarterly reports, and you can follow daily on the stock price. And you can see that the stock price recovered significantly just because the economics of their businesses recovered significantly. And that happened also to our business. So in the last period, we are recovering, and we are living in an industry that base oil is the lowest price in many years. Collectors have to start charging for the used oil. Generators finally accepted the fact that they have to pay for the used oil to be collected. Now they get to the idea that instead of waiting to get paid, they prefer to make sure that the collector that they have collecting for them is properly insured and has good equipment and can provide a good service. We service many, many big accounts. I mean, we service multinational accounts with 500, 600 different locations, and all of them went from, okay, don't pay us anymore, but make sure that you have the right equipment, the right people, the right training, the right insurance, just in case something happens, to do the collection service. And now what happened in the industry, there was a consolidation wave. I mean, the smaller collectors are being bought by bigger companies. And the biggest company in the United States is called Safety Clean. Is the biggest refinery in the United States. And I will show you one map just to close the presentation. The market became more rational. Before, there were a lot of little independent collectors that were not really rational. I'm not sure if they knew how to run the business, and that's why when the market collapsed and they didn't change, they went bankrupt. So today, the collectors that stay in the business are more disciplined and more rational. That's just my personal opinion, and that's what I see on the streets. And everybody in the industry became way more efficient. I want to believe we are the most efficient, but that is for debate. But I can say that everybody on the refinery industry became way more efficient just because we were under stress. And now it's kind of, we are on the sweet side of the deal because we are running super efficient plants. And by the way, what Thiago said before was, in the United States, the quality of the re-refined base oil is not questioned anymore for the last 10 years. All the base oil re-refiners are fully sold. It's just a matter of price, but all our base oil goes into industrial applications, into motor oil applications. I would say we are selling at a par price. We are selling at the same price that any virgin refinery sells. So I'm closing the presentation with the same map that I showed you before. These are the refineries I explained, the base oil plants, green dots, and the VGO plants, the red dots. But now I will show you by the owner of these plants. So there are 6 plants in the United States today that are owned by one company, and 2 plants are owned by another company, and then there are a few other left, including us. The green dot in Atlanta is our plant. So what is this? This is the big consolidation that is happening. And what is good about this is that, as I said, more rational players, bigger players, are able to impose a more disciplined market on the price side. Just to close, now all the refiners control their own collection. That is important, that all the oil we put in our plants is collected by ourselves. The demand for used oil, apart from refining, is going down. As I explained, the export markets are closed just because crude oil is not high enough. And natural gas connectivity is going up. So many burners are being connected to natural gas. Collectors without refining capacity are under pressure, and I'm not sure they will be able to survive unless they get a partner on the refinery side. The consolidation process is not over yet. All the big companies are continue looking at the smaller collectors to acquire them. And in my mind, the base oil price, the margin, has to go up about 1.5 times before this big, I would say, crazy wave that happened in 2010 resume construction of new capacity. So I do not expect any new refineries in the United States to be built unless, as I said, margins go up significantly. And also, finally, at the beginning of the period, when everybody wanted to build plants, I've seen many people wasting money, building plants, not being rational about the investment, not being rational about how long it takes to recover the investment. And I think based on what happened lately, everybody in the industry has a much healthier approach, and investors are more cautious, and that's the way they should be. They expect reasonable returns from any business, including refining. And that's it from me.